It's Wednesday, the 27th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Crown Resorts keeps its licence in Melbourne but faces stringent new rules. That's our main story. Also this morning, the government provides guidelines about how we'll hit net zero, wild weather causes havoc in the insurance market, and a record price for a pair of Michael Jordan Nikes. Then stay listening for Sean's chat to Matthew Haupt from WAM Leaders for his take on the outlook for large caps on the ASX. But first, Sean, the findings of the Victorian Royal Commission into Crown Resorts were handed down yesterday, and the gaming giant won't lose its licence.
Incredibly, despite a litany of breaches and bad behaviour, the Victorian government will put the gaming giant effectively on a 2-year good behaviour bond. The final report of Commissioner Ray Finkelstein includes all sorts of bad behaviour: facilitating money laundering, links to organised crime, underpaying taxes, bullying regulators, woeful corporate governance, not protecting problem gamblers, and as the Commissioner put it, and I quote, conduct that was variously illegal, dishonest, unethical, and exploitative. The reason Crown didn't lose its licence is that it would damage the Victorian economy and innocent third parties, presumably workers. Shareholders were delighted with the outcome, and they pushed Crown's share price up 10% yesterday.
That list of issues of the bad behaviour is quite extraordinary. So what is the punishment then?
Well, for the next 2 years, Crown will be run by a special manager alongside the board and executives. The Victorian government has already nominated Stephen O'Brien, QC, a former anti-corruption commissioner in the state, to the role. He'll decide after 2 years if Crown's fit to operate the Melbourne casino, and the company will undoubtedly have to pour money into better compliance and governance processes. All this could hurt earnings, but we're not real sure yet.
Now, this was always going to be a big story, but Crown always gets a lot of attention because of the presence of billionaire shareholder James Packer. What does it mean for him?
Well, the report recommends he cut his holding in the company from the current level of about 37% to less than 5%. He needs to do that by 2024, according to the Commissioner. But the Andrews government hasn't actually adopted that recommendation as a priority. So we're not real sure where James Packer stands on this. Theoretically, you'd say he's probably out, or at least a minor shareholder, not a major shareholder. He'll certainly be under pressure to do that. But if I was a gambling man in this particular story, I wouldn't put my money on that.
All right. Well, what do you think about it all? What's your take on it?
Undoubtedly, Crown has gotten away with many, many crimes. At face value, it's really hard to see why it didn't lose its licence. But the business does provide a big economic boost to Victoria. It does provide plenty of jobs. I think it'll be really interesting to see just how profitable the casino is when it can't step out of line. All in all, it's probably a fair outcome, though if anything, probably too kind to Crown.
All right. So how then did markets perform over the past 24 hours?
Well, financial markets at the moment are really about bonds. The Australian bond market is facing its worst year in almost 3 decades as fears of inflation trigger a sell-off in government and corporate debt. The Bloomberg AusBonds Composite Index has fallen more than 3% this year. The last time bonds went backwards was 1994. Now, you might not think it's relevant, but it is, Michael, especially to you. The vast majority of us hold bonds in our superannuation funds, even if you're not aware of it. Bonds are supposed to be relatively safe investments. It's where you park your money to safeguard it. The enemy of bonds, though, is inflation, something that really hasn't been a concern in Australia for about 30 years. But times are changing. All these supply-side issues are pushing up prices, and inflation expectations have risen. Hence, the bond market is selling off.
And what was the name of that index again?
The index is called the Bloomberg AusBonds Composite Index.
It's not the catchiest name, is it?
No, bonds isn't the catchiest topic, let's be honest. But it is really critical. If you had a median superannuation fund, you might have 10 or 15%. of your investments in bonds, right? So if you have a fund worth $300,000, you're looking at, $40,000, $50,000 of your money sitting in bonds, and it's going backwards. And of course, this is supposed to be a safe investment.
Yeah, so it's certainly something we should be paying a lot more attention to.
Yes, we should. Just quickly, Michael, in equity markets yesterday, the local ASX rose ever so slightly to finish at 7,443 points. Among the large caps, the miners were mixed, so too the banks. Afterpay was the best performer, up 3.3%, though it had fallen the day before. Coles Group was the worst performer of the big caps at least, down 1.7%.
And what about overseas markets? How did Wall Street do overnight?
Well, Michael, earnings season rolls on with some good results overnight from UPS and General Electric boosting the market. In early afternoon trading, all the major indices were higher. Twitter, Alphabet, which is the parent of Google, and Microsoft are due to report later this morning, Australian time. European markets were also stronger. The Aussie dollar is buying 75.1 US cents. Oil prices were higher again overnight, while gold prices dropped back a bit.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. It's been a pretty big 24 hours for business news. The federal government has outlined its technological roadmap to net zero emissions by 2050, and pretty much all sectors, including agriculture, have to do their bit.
Yes, they do, and the plan includes using technologies that haven't actually been developed yet. The easy part of net zero is stating the target. The less easy bit is explaining how you get there, and the hard bit is doing it. Now, the government yesterday embarked on the middle bit, explaining how we're going to get there. The government's relying on still to be developed technologies. Now, these might be things like improved feed for livestock to reduce methane emissions, reduce carbon output from cement production, improve the efficiency of solar panels, those types of things. While it all sounds a bit wonky, it is actually normal to build technology development into these long-term models, and given so much money is going into this renewables area, it is likely that these technologies will come through.
So how is the government proposing that we get there? Can you break it down a little bit more?
Well, they've got 6 priority technologies: low-cost solar, hydrogen, batteries, green steel and aluminium, carbon capture and storage, and soil carbon. There's tens of billions of dollars going into this, and the government plans to still rely on gas and possibly coal even as late as 2050. Now, the government said its modelling, which hasn't been released, shows individuals will be $2,000 better off, the gross national income will be 1.6% higher, and 2,000 new jobs will be created in regional mining and heavy industries. It's also upgraded its emissions reduction projections for 2030 between 30 and 35%, up from 26 to 28%. All that's fine, but we really haven't seen the modelling behind it. There's a long way to go on this to look at the finer detail to see exactly which sectors will be hit hardest, particularly for the Nationals, who are very, very concerned about mining and agriculture.
All right. So, Sean, what's the latest then on the COVID front?
Well, Victorian Premier Daniel Andrews yesterday said only vaccinated international travellers should be allowed into Australia. That's particularly relevant for that state, of course, because the Australian Open tennis is scheduled for late January in Melbourne. Victoria has now achieved a 75% vaccination rate. It reported 1,510 cases yesterday. The latest New South Wales surveillance report shows that fully vaccinated people made up 12% of coronavirus cases in the days before the state reopened. Unvaccinated people made up 5 times that, 59% of cases. There were 282 new local cases yesterday. South Australia said it would reopen its borders on November 23, and it's now racing to increase its vaccination rate beyond the current level of 63%. There were 12 cases in the ACT yesterday, Michael, and 2 in Queensland.
Okay. Now, Sean, the iron ore miners have had pretty much a golden run up until a couple of months ago. That's now ended, raising questions about the profitability of some of the sector's smaller players.
Yes, it is, and that was borne out by Mineral Resources yesterday, the country's 5th largest producer. Its share price tumbled more than 7%, that was the worst on the ASX 200, after it said it wasn't making as much money on iron ore as expected. The benchmark price of iron ore is now around $120 a tonne, way down from May's $230 a tonne, but still reasonably high. You should be able to make money at $120 a tonne. The problem for Mineral Resources and plenty of other miners is that costs have gone through the roof thanks to COVID. There are labour shortages, shipping costs have soared, and the actual ore that's being exported has been lower grade. That means Mineral Resources hasn't achieved benchmark prices. In fact, its average price during the September quarter was just $78 a tonne. As we talked about this last week, Michael, soaring commodity prices can hide many sins. But it seems now that the local mining sector is being somewhat caught out.
I mentioned at the top of the show, Sean, that Suncorp, the insurer with brands including Amy and Apia, has said that extreme weather events are hurting its profit.
It did. Suncorp's posted its worst start to a disaster season in 5 years. Hailstorm, earthquake and storm insurance claims so far this financial year is heading towards $500 million. Now, that's about half the money they put aside for the full year, and it's before the cyclone season even hits Queensland. It's not all bad news, though. The insurers broadly have had fewer claims because of COVID. People working from homes means fewer home burglaries and fewer car crashes because there's less traffic on the road. Last week, Suncorp's main competitor, IAG, kind of gave the same story, saying it had suffered higher costs in the first quarter as well, mostly due to storm activity in New Zealand and the earthquake in Victoria.
Okay, Sean, what's making headlines in today's news media?
There are reports that Patrick Terminals has applied to the Fair Work Commission to terminate its agreement with the Maritime Union of Australia because the deal was no longer fit for purpose. It's an effort to try and end decades of union control of the wharves. The Sydney Morning Herald is reporting that rapid antigen tests will be available in major supermarkets from next week, with Coles the first to stock the 15-minute turnaround kits across 700 stores. And there are several international media reports saying that a report released by the United Nations overnight puts the planet on track for an average 2.7 degrees Celsius rise this century, demonstrating the desperate need for action at the COP Climate Change Summit next week.
Running through some of the other stories around today, the New South Wales ICAC inquiry into former Premier Gladys Berejiklian continues, with her former Chief of Staff conceding she lied to her over when Ms Berejiklian's relationship with disgraced MP Darryl Maguire ended. Ms Berejiklian will appear on Friday.
Bega Cheese now owns Vegemite, Dairy Farmers, Yoplait and Big M, among others. It held its AGM yesterday, and the group's looking to get into the infant formula business, even though the market in China may never recover to pre-COVID levels.
The Prudential Regulator has criticised superannuation funds for spending members' money on sporting sponsorships and marketing campaigns, warning it'll take action if the expenditure can't be justified. This is something that you've spoken about before, Sean.
Oh, it's a real bugbear of mine that the super funds are actually spending on sporting teams. It's just not right.
Yeah, absolutely.
There's some good news from the petrol refining world, and that's not something I thought I'd ever be able to say. Ampol's operations during the September quarter were profitable, meaning it didn't need government subsidies, which only kick in when refineries lose money. The Lytton refinery in Brisbane made $22 million during the September quarter on the back of higher margins. And Michael, staying in the same industry, Oil Search, which will soon merge with Santos, posted a jump in sales on the back of higher gas prices, but it pushed back the final timing for an investment decision on its $4 billion Alaskan oil project.
And I mentioned earlier, Sean, that this has been a very big 24 hours for business news. It must have been a big one if we're only now getting to this story. And that's one of the biggest IPOs of the year. Asset manager GQG Partners listed on the ASX yesterday. The $1.3 billion IPO kicks off a run of large listings in the final couple of months of the year. Day one was a bit mixed, with the group's share price up 6% in early trading before it closed down 2.5%.
And there were several other updates in the market yesterday. Gold miner Regis Resources said the September quarter had been tough, though it stuck to its full-year production guidance. Plumbing parts business Reliance Worldwide said it would acquire a US business for $325 million. And digital jobs group Freelancer said marketplace volumes had fallen 6% last quarter. Tough times for that organisation.
Yeah, certainly is. What's the key overseas news this morning, Sean?
Well, this week is a big one for the technology stocks on Wall Street. Facebook reported yesterday and warned that Apple's new privacy rules would weigh on its digital business because they prevent advertising from using its ad servers. Facebook reported lower than expected revenue for the September quarter, but will buy back about $50 billion in stock. That is massive.
Wow.
The social media giant was also positive about usage of Facebook, Instagram, and WhatsApp. China's commenced giving COVID-19 vaccines to children as young as 3 as the country tries to control the latest Delta variant outbreak. The vaccine is a homegrown Sinovac. Around 75% of China's population is now vaccinated. And Michael, an early entry for the story of the week. A pair of Michael Jordan's Nike shoes have been sold at a Sotheby's auction for $1.47 million.
Wow.
It's a new record for sneakers worn in a game. So they're actually used sneakers, though they were autographed by the great man himself. The shoes were worn by Jordan in his 5th NBA game, just for one game, in his rookie season back in 1984. A pair of Jordan sneakers held the previous record of $615,000. But the record for sneakers not worn in any sporting game goes to Kanye's West's first pair of Yeezys, a pair of black leather high tops worn by the rapper to the Grammys in 2008. They sold for $1.8 million in April. Sneakers, I suggest, Michael, are now in the stratosphere of fine art. Some people have way too much money.
Yeah, the difference, though, when you buy a Picasso and you buy a pair of Michael Jordan's Nikes is that the Picasso doesn't come with a free can of Febreze.
No, it doesn't.
All right, up next is the Daily Interview. And today, Sean, you're speaking to Matthew Haupt from WAM Leaders, part of the Wilson Asset Management Group.
Yes, I am. We ran through some stocks and his view on the different sectors across the ASX. Really interesting for any investor.
Yeah, it certainly is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Have a great day, Michael.
It's Wednesday, the 27th of October, 2021. Make sure you're following the podcast. Join us online on LinkedIn, on Twitter and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.